All right, hello guys. Good morning. Welcome to our morning market update for Thursday, November the 29th of 2018. This is George Papazov, your sometimes friendly host of these morning market updates. I hope you guys had a great day. Equity markets have seen a little bit of a rebound, not a little bit, pretty sharp of a rebound in the last couple days, as we had expected. We were looking for a rebound into midweek, and we just about got that. We got a pretty strong midweek reversal so far from these lows in equities. Today, we're going to talk about a few things, some key updates that came out over night, also some of the latest economic figures, and we're going to also review who's speaking on the calendar today. A lot of Fed speakers, and we have a huge announcement at 2 p.m. today with the FOMC meeting minutes, and they're front and center even more so because of yesterday. And we are going to trade that together with the elite group. Hang on.
Is expected to plead guilty to making false statements to Congress regarding the Russia investigation.
Michael Cohen is expected to plead guilty. Breaking news in the Russia investigation. Okay, hang on. Video isn't working. Hang on a second here, YouTube. Thanks, Donna. I froze again. Wow. It's because I moved the camera. Every time I move the camera, it does that. Let me do that one more time. Huh. Well then, I should probably just buy a new camera. All right, there we go. It should work now. Thanks, Donna. All right, guys. So here's the deal. Let's jump into this morning market update. Overnight, we had some movement in the markets. We had a rebound through Wednesday. So Japan's up 0.8%. Hong Kong's down 1 percentage point. China's down 1.3. India's up 1.3 as well. Mixed markets in Asia. In Europe at midday, London's up 0.4%. Paris is up 0.5%, and Frankfurt's up 0.1 percentage point. And in the United States, Dow, S&P, and Nasdaq all down significantly. 0.2 on Dow, 0.3 on S&P, and 0.6% on Nasdaq. All right, it's quite a bit of downside here. Crude oil futures were down 1% below the $50 mark for the first time since 2017. All right, that's on stockpiles for or increase of inventory rather for 10 consecutive weeks. On yesterday's report, we saw that crude oil had another build of inventory, and that was the 10th straight week, and it pushed prices lower before we rebounded. So overnight, we hit, before the pit open, we hit 49.79 downside and slightly lower, and we've rebounded sharply still, or since, now up over 51. So crude oil's making a little bit of reversal here. I'll tell you why in a moment. All right, gold's up 0.6%. Bitcoin's up 3.8%, the 4,165. So a pretty nice rebound here on the Bitcoin futures. 10-year treasury yields are down 3 basis points to around 3%. All right, initial jobless claims this morning came out at the highest level since May. 234,000 people filed for unemployment versus 220,000 prior, and the 4-week average went up to 223.2 versus 218.5. So this is pretty a pretty interesting update, because more people filing for unemployment tends to mean that the economy hasn't done as well. And especially when you look at the fact that we're heading into a seasonal period where employers should be hiring, especially retail, for the holiday. So that's an interesting thing to see this morning. And at 10 a.m., we have pending home sales. That's a pretty big indicator and economic event. 10:30, we have natural gas inventory. 2 p.m., we have Fed's Messer speaking. 2 p.m., we also have Fed's Evans speaking. 2 p.m., we also have FOMC meeting minutes. And as you can see, 2 Fed speakers and meeting minutes being reported. That's going to be a huge opportunity in markets at 2 p.m. Eastern this afternoon. And I'll tell you why in just one moment as well. But before I say that, as an elite member, we're going to be trading this live together starting at 1:45 p.m. today. All right, so you guys get some extra extended hours trading. It's going to be a massive opportunity. All right, what else do I have for you here? So as we said, crude's down and rebounding currently. The G20 meeting officially starts on Friday, and there's some talk that Russia and OPEC producers, the main one being Saudi Arabia, are going to look to come to some sort of agreement here to try to woo Russia back on the side of cutting production or extending production cuts. The reason it's become a little bit more challenging is because Putin said that a weak ruble and a budget surplus means that he's fine with where current prices are. He doesn't really care. So he's saying Russia doesn't really need to cut production. We can continue to supply oil at this price. It's fine with us. Saudi Arabia does not like that, however, because they want to keep, they have a way bigger exposure to oil, and they want oil prices higher. However, it conflicts with what they've promised Donald Trump, because Donald Trump promised them to shield or withhold investigation from the Khashoggi killing in exchange for lower oil prices. That agreement has worked out very well. I mean, look at where oil's trading now, below 50, all right, this morning. So we're going to look at some of that over the G20 meetings in the next 2 days. And here's what moved markets yesterday. I'm sure everybody's wondering what the heck caused the market to rally so much yesterday around noon. In the morning, we kind of queued you guys up. Hang on. All right. In the morning, we had queued you guys up for a Jerome Powell speech, which said was going to be very important. And what was so important about it, Jerome Powell said in September that he's far from the neutral rate. Right? You guys got to understand, what is neutral? Neutral is a rate at which the Federal Reserve is gonna say the economy and interest rates are now balanced. Rates aren't too high or too low. They're right where they need to be. All right, that's the neutral rate. The neutral rate is where the Fed's expected to stop hiking rates. Well, Jerome Powell was speaking yesterday at the Economic, let me see the title of that, Economic Club of New York, and he said that interest rates are just below broad estimates of a neutral level. All right, we know that moving too fast would risk shortening the expansion, said Jerome Powell. He also says we know that moving too slow will keep interest rates too low for too long, could risk other distortions to the financial system. And basically what he's saying here is, look, he was all about hiking rates. Jerome Powell was all gung-ho. Let's higher rates faster. The economy can support it. Great economic developments. Let's go. Hike, hike, hike. And suddenly this is a dovish tone, which means what? So, hold on a minute. Let's review some of the data. And it's very interesting timing because Donald Trump's been harping on him the last couple of weeks. I don't know if I made a good pick for the Federal Reserve. And I mean, he's not picking Steve Mnuchin. He said made a pretty terrible choice. I don't know, right? Jay Powell, he doesn't even make me a little bit happy. Those are words from Donald Trump's mouth. And so, question here is Jerome Powell starting to cave into the demands and expectations of Donald Trump and his administration for lower rates. So him saying that we have closer gap to neutral right now, that's dovish. That means we were pricing in more rate hikes than we're probably going to have. And the market did what? It rallied. Less interest rate hikes means less upside, less borrowing cost pressure. Things are cheaper to borrow. All right, companies will continue to make more money. Costs are lower, etc. Consumers can afford to spend more because they can carry the debt at cheaper levels, and that's pushing economic activity higher. And that's why the market likes it. All right, so market rallied on that news. It was relentless. A lot of shorts got squeezed. Their head in a vice. They just kept turning until we pretty much squeezed out everybody. Giant short squeeze yesterday. The question is, what's going to happen today? All right, do we still have more bears? Today I'm saying buy the dips. Sell-offs are viable. I think there's a little bit more upside opportunity. And the big news right now is all attention starting to shift to the Fed meeting minutes this afternoon, but more importantly to the weekend where we have the G20 meetings where China's Xi and Donald Trump are going to meet and talk about their latest rounds of the trade war and if they could come to an agreement. We have a very, very, very important weekend ahead. And the outcome of that weekend could really make significant moves for the market. You can see the market over the course of the next couple of weeks be up 10% or down 10 more percent. All right. That's how important this weekend is coming up. Here's an interesting stat. 32% of investors expect at least 3 rate hikes in December or by December of 2019. So a year from now, they're expecting 3 more hikes. All right. That's gone down to 2% from 37 just one day earlier. So Jerome Powell's Economic Club of New York speech has shifted the expectation of interest rates by 5 percentage points. That's a lot for one day. All right. And you can track this on the CME. Just type in Fed Watch Futures. You can always see what the expectation is for future rate hikes. That's priced in by the market. All right. So as the market went to reprice this new dovish sentiment, markets rallied. Here's the big question that we have to answer this afternoon. There's two huge questions for the FOMC meeting minutes. Number one, does everybody share the opinion of Jerome Powell? I call him Jay because I talked to him. Jay's my buddy. Jay and I are going golfing in a couple weeks. Yeah. All right, so question number one is, does everyone agree with Jay? Doesn't matter if they agree or not because Jay's opinion is the most important. However, do they agree? What's the landscape of other voters and how do they feel about that? And number two, most importantly, what's their forecast for the economy moving forward? All right. Do they think the economic growth is going to start contracting again? If so, that's going to be more dovish. Markets could be expected to move higher, even on an expectation of weaker economy, right? If they think that the economy is improving, then are they going to continue to raise rates more? What Jerome Powell did yesterday is not an official speech. You guys have to remember that. He went in before the Economic Club of New York. That's not an official venue. He's just rambling, talking about stuff. What is said in the meeting minutes, that's official Fed speak. That's his job. That's what he's getting paid for. These economic club meetings and all that other stuff mean nothing if it's not reflected in the Fed meeting minutes. So we need to see it today. And if we don't, market could drop again. All right. Trade Pros Elite. We'll see you guys 1:45 this afternoon. We will have extended hour trading today. Take it to be huge opportunity. Massive moves expected this afternoon. All right. That's what we got. Natty gas inventory, a couple Fed speakers, and FOMC meeting minutes. Should be a good day. Buy dips, protect your risk, and manage your risk. Trade like a trade pro. I think I see a little bit more upside on this market. I think strong open, and then it might get faded in the reversal hour or late morning. All right, you guys take care. Have yourself a great day. We'll see you tomorrow. And stay safe out there. All right, don't blow out your account. Keep your powder dry. There's a lot of opportunity coming up in the next couple of days and next week specifically. Okay, guys, take care. Have a great day. Got to turn around and open up the trading room. Adios. C'est la vie. Trade Pros, let's map out some levels together. There are some good trades shaping up here pre-market that we're setting up that I'm watching. There's a few levels that I want to see broken or tested to qualify some trades. And then Steven's going to go on the microphone and talk to you about the same thing on oil and what he expects for the day. All right, so let's get started into our levels.